Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, I'll be sharing with you three particular stocks that I plan to buy in the stock market in the week ahead. These includes one growth stock, one dividend stock, and one exchange traded funds. Before we get into it as well, we will be taking a look at the amount of dividend that so far we've earned in the months. So let's get into it. You notice here on the screen the amount of dividend that we've earned on our Wealthsimple Trade account so far this month. This is a total of about $21, hovering around dividends from PDI, VFV, 𝗖𝐋𝐈𝖖𝐊 𝐁𝐘𝐼, VDY. With VDY, we got twice the dividends, one from our tax-free savings account and one from our registered retirement savings plan. But the largest dividend income that we've had so far this month is from DGS. In our tax-free savings account, we earned $9 of dividend income. DGS, for those of you who may not be familiar, actually does pay a very juicy distributions every month, hovering close to between 16 to 18%. We've made a video on this channel talking about it in depth. We also earned about $1.50 from our positions in our registered retirement savings plan for our distributions from DGS. Our Wealthsimple Trade and crypto account currently has a value of about $21,500, majority of which is in our personal account, followed closely by our tax-free savings account. The very first stock that we plan to buy in the stock market in the week ahead is Shopify. It is a growth stock that is available in both US dollars as well as in Canadian dollars. In this particular instance, we are looking at the value of it in Canadian dollars. Last was traded at the price of $731.93. It was down by close to 3.5% in the last trading day. Looking at the past performance for Shopify stock in the past 1 week, the stock is down by about 5.5%. The past 1 month, the stock is showing to be down by close to 15%. The past 3 months, it is down heavy by close to 47%, not too far away from its 1-year return of 49% negative. However, if you look at longer time horizon, 5-year return for Shopify stock is showing to be close to 670% positive return. Now, for us, we do have fractional shares of Shopify currently, about slightly more than half a share. We have 0.6 fraction of a share. It is about 7% of our current portfolio in tax-free savings account, and it is down by 35%, given our average purchase price of $1,127. We plan to buy fractional shares of Shopify in the stock market in the week ahead, take advantage of the price declines, as we mentioned, in the past 1 year and 3 months, almost close to 50% decline in the value of the stock. So we want to dollar cost average and add to our shares of Shopify. Shopify is a growth stock, and looking at some of the charts related to this stock, this one in particular for the US dollar version of Shopify, currently in terms of the price to sales, trailing 12 months, we are looking at a ratio of 15.66, which is one of the lowest it has been in years. In fact, if you look at the past 5 years, it was the lowest point hovering probably closer to that 13 to 14, and it is currently close to that range, whereas almost a year ago, this ratio was at much higher, more kind of expensive ratio. We were looking at close to 60 or 60 even 2 at one point when it comes to the price to sales ratio trailing 12 months. Looking at the past 5 years, the total revenue trailing 12 months for Shopify is showing a upward trend, nicely growing their trailing 12 months total revenue. And by the end of 2021, it was at $4.6 billion. As for their net income trailing 12 months over the past 5 years, you notice that for several years, they were actually loss-making business, but they started to turn things around close to halfway through the year 2020. And from there on, they managed to reach kind of a max of $3.41 billion. That was in September of 2021, although the trailing 12 months net income is down since then and now showing at $2.91 billion at the end of the year 2021. Still, it is a very decent net income trailing 12 months for the business. And we believe that Shopify stock and its return over the past 1 year is possibly an overreaction overall to investors who've trying to stay away from the growth stocks and kind of putting aside a lot of their high growth stocks and sell them to switch to more of a value stocks. It could be a good opportunity for investors to get in at these times. Looking at the 52-week price range, the lowest that the price of the Shopify stock has hit, this is for the US dollar version, was at $510, and the last trading price was at $579. So still very close to that range, as opposed to the high price of close to $1,700, over almost $1,800 in the past 1 year for this stock of Shopify. Our second pick in the stock market in the week ahead is a dividend stock. This is a Toronto Dominion Bank. It is available with ticker symbol TD, both in Canadian dollars as well as the US dollar. And the Canadian dollar stock was last traded for the price of $93.99. The 1 week return for the stock was showing to be down by 2.2%, 1 month's return of down by 7.66%, 3 months return of close to 10% negative return, and 1 year return of positive 14%. 5 year return for the stock is at close to 45%. Currently, we have several shares of that. We have in our tax-free savings account close to half a share of TD. In our personal account, we have 9.2 fraction of a share. And in our registered retirement savings plan, we just started to add and create a small position. We have 0.07 fraction of a share. With Toronto Dominion Bank, it is a reliable dividend paying stock with a dividend yield of 3.57% at this time. Its price to earnings ratio is at 11.77, which is, if you compare it to that of the average for the financial sector price to earnings ratio, it is slightly better than that. And it is in line with its own 5-year average price to earnings ratio. We want to continue to build a larger position of Toronto Dominion Bank, but we're going to do that gradually over time. We're not going to necessarily put a heavy amount of investments in it. We have, as you notice, we already have some position built. We want to gradually over time add to our shares of TD, building it into a much larger dividend generating passive income stock for us in our portfolio. And lastly, as promised, the third pick would be ETF. It's a index ETF, Vanguard FTSE Canadian High Dividend Yield Index ETF, ticker symbol VDY. As the name suggests, it invests in high quality Canadian dividend paying stocks. Majority of exposure is into financials, but it is kind of diversified in the sense that it has other sectors within the Canadian market as part of its exposure. Looking at the return, the 1 week return was almost stagnant, down by 0.28%. The past 1 month, fairly stagnant as well, but down by about 0.66%. 3 months return of up by 2%. 1 year return of up by 24%. If you look at the 5-year return, we are looking at a return of 41%. What's unique about VDY is the fact that it does pay a nice dividend of 3.24%. It's annual yield currently, but these dividend distributions are paid on a monthly basis, which is perfect for investors who would like to build a monthly distribution income for themselves. Our shares are currently at 22 in our tax-free savings account, which is down by about 1%, and 1 share in our registered retirement savings plan, which is down by about 1%. We would like to add to our shares of VDY in the week ahead in the stock market. Are you currently investing in any of these stocks in your portfolio? Let us know in the comment section down below and share with us what stocks or ETFs you plan to add to your positions in the week ahead in the stock market. Hope you found this video beneficial and gained something of value from it. If you did, don't forget to give this video a thumbs up and share it with someone else who might benefit from it as well. And of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, whether it's investing in the stock market, including dividend stocks, growth stocks, and exchange trade funds. We also talk about ways to reach financial freedom. Thank you, and I hope to see you next time.